So we will soon be getting ready to commence a new week on Wall Street beginning July 13, Monday. This week will, in my opinion, be a very crucial one for many reasons. We have some very important Federal Reserve speakers going to speak this week and some very important pieces of data that are going to come out, which, in my opinion, could be quite market moving data. Let me first tackle the easier part of what type of data is expected to come this week. So, we have on Tuesday very important consumer price index coming at 8:30 a.m. Eastern time, and CPI year over year plus the core CPI year over year. All this is going to be coming on Tuesday. Wednesday, very important piece of data is the PPI, Producer Price Index, which is going to come out. Core PPI, PPI year over year, core PPI year over year. All this is very important piece of data. Thursday, even more important, US retail sales showing what is the consumer sentiment. Is the consumer still buying? Are they buying less? Are they buying more? Also, you will see the Philadelphia Fed manufacturing survey. All this is important piece of data. And naturally, as you can well understand, that the CPI and the PPI will hold great importance this week. We also have the Fed speakers for Monday. We have Michelle Bowman speaking uh, at an important avenue. And then on Tuesday, we have very important speeches coming in. One is the Federal Reserve Chairman Kevin Walsh testimony to the Congress. And also, we have Chicago Fed President Austin Goolsbee speaking at 1 p.m. So his comments would be very closely looked into. We also have the Fed Governor Lisa Cook, and we have Michelle Bowman speaking as well. So many of the Fed speakers expected to come out. And Wednesday at 10 a.m. we have the Fed Chairman Kevin Walsh continuing his testimony to the Congress, and we have at 6:30 p.m. the St. Louis Fed President Alberto Musalem speaking. I believe you have Alan. This is going to be a sensational week as far as so many Fed speakers coming and expressing their opinion as to what they think is the trajectory of the US interest rates, how serious the inflation problem is, whether it is transitory in nature, and whether the inflation is something that the Fed is believe is coming under their control, or whether we are seeing that Fed may necessarily have to hike the interest rates a little bit to be able to bring this under control. So all these statements will be very, very closely looked into, and the market will be under a very close watch by investors, speculators alike. Now, why are all these things important? The CPI and the PPI, as you very well know, have very close correlation with the interest rates. What really happens is that the good amount of capex that is going into various AI companies, such as OpenAI, we have Anthropic, NVIDIA. They're cross investments into each other. For example, NVIDIA's investments in OpenAI. All this necessitates huge amounts of capex. They also necessitate borrowing from private debt at very low rates of interest. So far, the earnings have not been commensurate with the amount of capex that is going into, but the investors have been very patient as it is a new technology. They're giving it time to come up, to come on stream. Now, this is expected to change in the rather near future. As we see inflation not coming under control, for, for which the chances are quite high. You may find that the bond yields will start going up. 10-year bond yield has been very sticky at 4.5%, and it has great amount of resistance at this level. History has shown that over the last few years that when it has crossed 4.6 or 4.7, you're seeing even the stock markets begin to rattle. Should the 10-year bond yield cross 5%, that would be a pretty negative scenario and could impact AI stocks. The scenario of the world is such that 2/3 of the market capitalization is occupied by the US stocks. We have, as far as the emerging markets are concerned, just Korea and Taiwan and their stocks compose 50% of the world's emerging market total capitalization. So we are encountering a situation of what we call as concentration risk. Should there be any movement, interest rates go higher impacting these AI stocks, you will see that there will be a great amount of movement that may take place from these high-flying hyperscalers and AI names and into more traditional stocks, like utilities. So this scenario is something which has been brewing for quite some time. You have seen the Philadelphia Semiconductor Index already getting punctured a little bit, although it has tried to make many comebacks, and it is still ruling at an all-time high in consonance with the AI rally. Any movements in the interest rates, in the inflation scenario, will go and impact the AI stocks, and that can impact the market capitalization of the US stock markets and the US indices, the Dow Jones, S&P, Nasdaq, particularly the Nasdaq, quite substantially. So we are looking forward to a very important week with very important pieces of inflation data about to come out. Don't forget that the AI rally which has been going on is at a rather advanced stage, and interest rates can be a major break point for AI stocks. So I would definitely encourage you, if you have not yet joined my channel and watching my video for the first time, do join it. We will be discussing the longevity of the AI rally, how long it can last, where it can burst, and this can impact not only the market capitalization of the US indices, the Dow, S&P, Nasdaq, but it can cause a severe dent into your portfolio if you do not exit at the right time. So thanks for watching. And yes, if you'd like to join any of my US predictions groups, definitely you can WhatsApp us 732-732-2720, and do share our videos with your business associates, anyone who would like to be more aware of the US economy, the US stock markets. Look forward to talking with you soon once again. Take care and have an awesome week ahead. Take care. Bye.